How to trade Tesla options. We will be talking about that today. That is one thing I've been doing in my portfolio over the past couple weeks. There are a few different strategies we will talk about today. How to do that, how to trade those Tesla options, how to trade some of these options just in general with how crazy the markets have been. Also on the docket for today, we will have David Green from Wall Street Global Trading Academy joining us here in a few minutes. Always great to get David on, see what he's been trading. We will do an update on airlines. Take a look at some of the airline stocks and see what's going on in the airline industry more as a whole. A lot of flight cancellations recently. A lot of companies citing a pilot shortage. Let me know in the chat if you guys have traveled recently, how those travel experiences have been. We will also be doing a session on what's going on in the crypto markets. We've been talking a lot about, Three Arrows Capital, some of these funds running into trouble. CoinFlex just announced a new coin offering 20% annual return to try to help raise funds. We will talk about that, see why that might end up being kind of problematic. And then the last topic I want to discuss today, well, we will get Options Mike on at around 12:15 p.m. Eastern. So we will be talking some options with Options Mike. He's one of the best guys to go to for good options strategy. He's not one of those guys that's just calling out crazy YOLO calls and puts and then posting the ones that win after the fact saying, hey, look at how great I am. Because what do we know about that strategy is A, it's not sustainable, and B, really, B, again, it's not sustainable. Most people that do it end up losing money. So we will talk about kind of some different option strategies there. And then last topic will be the bullwhip effect and why it matters, why that is something that people are talking about now, including Michael Burry, who, of course, from Scion Capital, famous from the Big Short fame, why even Michael Burry has been talking about this potential bullwhip effect recently. Let's go ahead, get started, roll that intro, and we'll be back.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojasek from Trend Spider. We have
breaking news. What is up, everybody? Happy Tuesday. What is up? So many beats in the chat. How you been, bro? I've been well. The markets actually, I was going to say the markets could be better, but really over the past week or so, we're looking all right. The S&P 500, doing some checks right now, is up still more than 4% over the last 5 trading days. So a lot of people are looking at this and wondering, have we seen the bottom? Is this the bottom? And really, the answer to that question is always the same. Time will tell. David Green and I spoke now a couple times about how the bottom is not something you'll be able to spot and call out in real time. There may be some people that will, but it'll be more in hindsight, right? That in 2 months time, you'll look back and say, oh, I guess that was the bottom, or 6 months time. Yeah, Patrick Starr, we do need to update that intro. Spencer's still in there. It's just one of those things that I'm holding on to. It's sad, It's like when you don't want to let go of that last thing that reminds you of someone. So we're gonna keep that intro until someone tells me we can't, which will probably be Spencer saying, "Hey, you can't keep using my." Honestly, I don't know. I think we can. I think we can keep using Spencer's image and likeness for clicks and views. So we'll keep doing that. Go ahead and smash the like for young Spencer right here. All right, guys, let's do a quick check-in on the overall market. Your Qs, the Invesco QQQ. Woo, took a little drop. I was looking at the markets like an hour ago before we started the show, and we were only down about a little less than 0.5%. Now we're down almost 1.5%. So a little dump on the Qs. I assume SPY will look similar. No, actually. I would be wrong. SPYs have been hanging out. They haven't had as big of a... The SPY did get a similar drop, but the SPY is only down about 0.6% compared to the Qs, almost 1.5%. Your Dow Industrial Average is down only about 0.3%. So tech is your laggard today. Qs down again 1.5%. Let's check in on ARKK, kind of the proxy for growth, down more than 3%. So growth out there getting hammered while the Dow is kind of hanging out. Let's check in on BRKB. Yeah, Berkby is pretty flat, down 0.1%. Let's see in the chat. So many beats saying he's just buying and hodling. Your hero is saying what happened to Spencer. Spencer went to the farm. He went back to the farm. Kyler Gilbert snagged a 735 Tesla put at 750 this morning. Good job, Kyler. You holding on to that, or you sell it for some profits? Tesla went up to about 750 right at 950. So if you got it right at 750, Kyler, that was the very top. You got to tell me next time you do that. You got to tell me next time you buy puts on Tesla when it's at the very, very top. We will be talking about Tesla options in a few different ways to kind of strategize those options, how to trade them. I do see my man hanging out backstage, DG, David Green. Let's go ahead and get David on the show, see what he's been trading recently. Let's go ahead and give David our very special intro and get him on the show. All right, give me 1 second. I got to get to the intro. I wasn't prepared for this. Oh, all right, here we go. Mr. Green, how you doing today? Uh-oh, looks like we got you on mute.
There we go.
There we go. How are you doing today?
Doing great. Boy, the market gave back a whole bunch of this morning, huh?
I know. I literally just saw that for the first time 2 seconds ago when I was doing the market update. I thought, oh, the Qs are down 0.5%, big whoop. And now I looked and it was 1.5%.
Yep. Crazy, man. And the thing is, we're hanging. I'm going to get you guys right to a daily chart of the spiders. Okay, here we go. So we had the nice run. You know, everybody who knows we nailed that 363 level. We rallied up, guys. If you look at our 30 EMA this morning to 393, which is exactly a 30-minute EMA, almost to the penny. And now we're testing the first little trend line, 385.70, and then we have 383.30. So I'll be looking to buy the spies if we spike down to 383.30 today for a trade. But yeah, I mean, this is not encouraging at the moment to have given this much back from this morning. Look, we got two huge numbers coming up, right? Tomorrow we got the GDP, and then Thursday we got the PCE. So two gigantic numbers that are coming up that this market's just going to, I think, is going to be all over the place in the next couple of days.
Yeah, and I mean with these numbers, it's all about expectation, right? I don't think a lot of people are expecting blowout numbers on the GDP, but if it comes in well below expected, we could see the market kind of have a negative reaction from that. But for me, I mean, that's such the GDP number for the previous quarter, such a lagging indicator.
Yeah,
right?
that's not a big deal.
It's something in the rear view mirror, whereas the prices of stocks in the market, we're looking through the windshield. We're looking what's ahead. What are the companies that are going to be doing well? So even if the GDP number is worse than expected, to me, I'm not going to be that worried about that, and I'm going to see if the market takes a negative reaction to that as a potential buying opportunity.
Well, here's the gig, though. Okay, yeah, you can say that, but then Thursday we got the PCE, which is the inflation, big inflation number coming out. So we got a double whammy coming up.
Right. Do you have commodities on there, David?
I can put up gold or silver, anything you want. Yes.
Well, I was curious about more some of these like resources that go into the not directly into the PCE, but you know the steels, the cotton. I looked at a chart of cotton the other day, and it's just falling off a cliff.
Yeah, I don't know what cotton is. I mean, we can put up U.S. Steel, just use that as an indicator, right? Yeah, and that's been horrible and not even that long. The last 2 weeks, the stock has gone down 30%. So yeah.
Right. So a lot of people are looking at these things and saying, oh, the PCE should be lower because the cost of a lot of these goods that are going into production have been coming down a cliff. But, you know, I guess we'll see that in real time, too. And that's also one of the reasons why the Fed and people say the market cares almost more about the PCE than the CPIs, because it's seen potentially more of a leading indicator that this is, you know, what the companies are paying to produce these goods. So it can be a you know,
Hold
kind
on
of
one
foresight.
second, Aaron.
Yeah, go ahead.
Guys, take $1 quickly out of the Tesla from 711.50. If it gets to 712.50, you know what our stop is. Okay, guys. Oh, we just got $1. There we go. Put out 712.90. We'll try to get $1.50. I'll show you guys this trade in a minute. Hold on a second.
Yeah. Wow. Tesla's come down even further since even in the last 5 minutes.
Yeah, we just made a trade. I'll explain what we did in a second.
Sounds good.
As soon as I can get my order out.
And then let me know in the chat, guys, what stocks you guys are watching today, what you guys are trading. It looks like everything across the board. We've had a little sell-off over the past hour or so. I mean, even energy, which is one of your best sectors today, has sold off a decent amount over the past 15 minutes or so.
All right, so here's a trade we just did, guys. We took $1 and $1.50 out of it in about 10 seconds. Everybody get the Tesla in the room, guys? So here, we were looking at Tesla, guys, and this thing just got smoked down to our pivot point, which was exactly 711.50. And we got in and out real quick. We sold the 712.50 and 712.90 for $1 and $1.50. And I can tell you in this market, guys, you got to be a trader and you got to take your profits when they're there and then get out of trades. Because if this thing breaks this 711 now, I don't know where we're going. But that was a quick trade we just did based on our pivot point. And we took a quick $1 and $1.50 out of it. Let's see, SPYs. Okay, here we go, SPYs, guys. SPYs are getting absolutely, yeah. Give me a minute.
Bagel schmeared, David.
They're getting bagel schmeared right now. Okay, so we're almost going to get set up for a far from moving average trade in the SPYs, guys. We got a 21-hour SI. So let's get our marker in at 384. That's our pivot point, right? 384.10, let's call it. I hope this trade set up, guys. This is one of my favorite trades if it does. So we're going to put a little order out at 384.10 on the pivot point. Now I think we're just getting a little overdone to the downside. This is getting a little too much. We'll see what happens. All right, guys. So we got an order out of 384.10 on the pivot point in the SPYs, and then we'll go in and add to it if we can get a far from moving average trade. So if we smack down there, guys, I'll walk you through this whole trade when we do it. Yeah, nasty last 30 minutes. So let me see where we are on the daily. Daily is 383.16. So let's see what happens here in the next couple of minutes. So we got our pivot point at 384.10, and then we got 383.16. The good thing about this, guys, okay, is that this is great for trading, right? I mean, it's a great trading environment if you got to pick your spots and use your technical analysis, right? Yeah, look at Tesla now. Tesla just gave a $3 trade off that level if you hold on a little bit. It went up to 714 from that 711.50. So great spot of support. Again, we're just in and out real quick. We're taking quick trades in this market because if you don't, it's a recipe for disaster. All right, let's see what happens if we spike down to that level. You know, if you look at the SPYs overall today, what are we down? We're not down much at all, right? It's just that we're down 10 handles from the high that we made a couple of hours ago. Tesla solid, you got 708.25. Your 2-hour 1 EMA, okay? We'll take a peek if we get there. How's what have you been doing lately, Al? You been doing anything?
Trading wise, not much, honestly. I've been buying some calls and puts here or there on the queues, but usually just cheap contracts that expire like the next day when I think we're either getting oversold or overdone. So if we keep getting hammered here, I might look at some calls that expire tomorrow just to try to play a little 1 or 2% bounce.
We did. I'll tell you what I did. I did some lotteries in the UVXY for tomorrow.
Oh, really?
Yeah, and we did it a little while ago. So I bought a 12.50 put, see if the market is really good and it gets smacked, and we bought a 16 call. I think the 16 call is paying us pretty good right now. Let me take a look. Hold on. Give me a second. We bought the 16 calls, I think, for 14 cents, and they're trading at 25 cents. So that's good. My thought is
go ahead.
My thought is maybe we can cash on both of them if the market gets really wackadoodle in the next couple of days. So yeah, I do some lottery tickets every once in a while. And UVXY is the way I'll play it. I think we invested a total of $60, and just the call side right now, 1550 calls are worth $60. So we're going to hold them into tomorrow. That's what I look to do when we got these crazy wackadoodle days coming up.
Yeah, and it's so interesting right now because I think by a lot of metrics, a lot of equities and funds did get oversold, but there are some stocks, I mean, Tesla included, to me, that is still trading very high, and that I don't think there's a lot of investors out there that think by any standard Tesla's doing that well right now in terms of that they're having. I mean, Elon Musk has even come out and said this quarter has been very tough, you know. So when I see a stock like that, that you kind of know isn't doing that great, at least by Tesla's standards, which have been super high and amazing. When you see a stock like that that's been up 10% over a week, or it's been up 4 days in a row or something, I'm like, oh, okay, this should give up a little here. It would make sense for this to give up a little here. Now, does it always end up happening? No, of course not. But that those are the kind of names I've been looking at. Coinbase too. I mean, Coinbase was up, you know, and it did get oversold, but it bounced a lot and then came back down, I think, from like the $75 level back to 50. And I was looking at this and I was like, no one in their right mind can look at the crypto trading numbers and think, oh, Coinbase is having a blowout quarter.
No, no, 100% not. No. Yeah, let's look at the daily in Coinbase.
And now, but see, now after the past couple days, it caught a downgrade from Goldman. Yesterday was down like 10%, down another 5% today.
Yep.
After these last 2 days where it's down another 15%, all right, now it's more at a fair value where it should be trading. But before that move, those are the names I've been looking at saying, these companies aren't doing that well. Why are they getting so much of this bounce, you know?
Yeah. I mean, we really went from a low of 46 to what, 65 in the last couple of weeks. So it's had a nice bounce off the low. You know what everyone's been talking about lately? Robinhood. I'm hearing this from a lot of people, and they have it's trading below the value of the cash that they have on hand, and yada yada yada. Yet the thing can't get out of its own way. I mean, we've bounced from $6.80 to $9. I don't think that's, I don't think they're going out of business, Robinhood. They're too big a name to go out of business. But
I don't think they're going out of business either. And I do think that gets interesting when you get that where the market cap dips below the cash on hand, because then they become an acquisition target just for their balance sheet. You know, someone can buy them
right.
but there has been kind of some acquisition rumors over the past couple of weeks. I know there were some with FTX and Robinhood, and FTX has come out and said that they're not looking at buying them. So I think that's why Robinhood, at least over the past or yesterday, might have moved down a little bit. But yeah, I think it's an interesting name for sure. Like you said, it seems like too big of a name to just go out of business.
Yeah, and I like stocks where your downside, right? I mean, there's people who invested in stocks from 500 that are trading at 120. Robinhood's trading at $9. You know your downside. That's all you can do.
What about this one? I'll give you a real ugly chart if you want to pull
it. All right, just give me 1 sec. Guys, in the SPYs, guys, we're going to go down to the daily, and I think we could be a little aggressive if we spike down there. 383.20. Okay? So full trade at 383.20, guys, if we go in that direction. The reason I interrupt Aaron every once in a while is because I'm trading in the private trading room, and we post every single trade that we do before we get into them. And then we talk about stop orders and profit targets. Okay, give me one.
I like it. That's what you're here for. All right, ugly chart time. We're doing ugly charts. B as in boy, R as in Robert, D as in Dennis, S as in Sarah.
For the birds?
For the birds. Look at this chart, man.
Wow, $10.
It was a SPAC. Yeah, $10 SPAC. It's trading at like what, 50 cents right now? 60 cents?
46 cents.
Oh my God.
Yeah, it came out in April. It came out in April at $11.32. Jesus, that's disgusting, to be quite honest with you.
It really is. I wonder
the fact that they would even bring this to market, right? And then have this happen to it. I mean, that's gross, man. It really is.
I know. I wonder. I look at this chart and I think about if there are people, executives that have like lockup, like they have their shares that they can't sell, and they're just watching them go down 95% over, a few months.
That is borderline criminal to me. I mean, it just is.
I think
I'm
so.
sure
I think
there are a lot of people. Look, maybe they got it for nothing, but still, that is not fun, man.
Yeah, I think a lot, and looking back at some of these companies that went public via SPAC, we're looking back in hindsight saying, why did the SEC ever allow this, ever allow everyday Americans to invest in some of these companies with essentially no oversight, no regulation, and this is what happens.
Well, I mean, look, let's talk about coin then, right? I mean, this IPO was $429. And, I remember a lot of people talking, especially Kramer and Kathy Wood, obviously, that, this was it. And it's down 90%. You know what I'm saying? So, what else? And a lot of people got caught in this lockup, but I guess you could have got out in the 250s, 260s. But look, there's 100 stocks that we could look at their charts and come up with the same thing, right? Without a doubt. So someone just asked, I saw this, I caught it, I want to talk about it for a minute. Why is the market down today with the GDP coming out tomorrow?
I saw that too. That's good question.
I mean, why did the market, if we look, on our daily chart, why did the market for the last 5 days, go from 370 to 393? We got a little bit oversold. The market bounced up. It was a huge move up. And now we're just giving back some of the profits that we took. Giving back a lot more than I'd like. Right? I mean, we really need to hold this 383 level. But look, this is happening every day in the market. We have 5, 6, 7%. These moves are happening every day. So maybe the GDP is going to be bad and it's already in there now. Yeah, exactly. So who knows, right? You don't know. Yeah, consumer confidence, Jay, is not enough to have made this market did that. It's a combination of other things. Consumer confidence changes, bi-weekly. So we're not doing this because of that. It could be big profit taking before the GDP tomorrow. You know what? If it's negative GDP tomorrow, aren't we in a recession? Won't this be 2 quarters in a row, Aaron? I think.
Yeah, it would be, and that's why I'm saying that I don't think a lot of people are expecting the number to be good, and even if it's bad, okay, we've already known the past 2 quarters haven't been great, but it's more about what about the next 2 quarters and the 2 quarters after that, and that's this kind of cyclical nature. The headline that Jay Rice is referring to, the consumer confidence, you see that headline, investors see that headline that the consumer confidence is the lowest it's been in 9 years, but what if then in 4 weeks or 6 weeks, the demand has been crushed so much that you're seeing all these companies like Target put these crazy sales out, and then inflation comes down, so then the Fed wants to lower, then you're not having that same conversation that we're having today in 6 weeks. So it's a lot of these numbers and things we're talking about are things looking back in the rearview mirror, things looking back in the past.
No question about it. Yeah, and Jay, I know that's when the selling started, but I've seen consumer confidence numbers come out for the last 30 years. They don't take the market down 1,000 points. Not generally. Okay? Generally, they don't. But it just could have been another excuse to say, oh, we're not in as good a shape as everybody thinks we are. And again, it's just how this market's been. We have 1-2% moves in 20 minutes in this market based on nothing. So, no, I don't need my 1-minute chart. I can see exactly where it came out here. I mean, here's 10 o'clock right there. So, again, we had an initial spike down. Then we rallied up. And then we hung around a little bit. So, it took 30 minutes for the market to start going down. Yeah, how can anybody be confident in this market? I mean, the way that these things are trading, it's impossible. The only thing I'll say is this too shall pass, right? And then we had some more bad news out of Russia today. Something happened over there where some other stupid stuff is happening now, and whatever. The world's a mess right now. But as Aaron always says, if you're young, this is the time to be investing, especially if you haven't been investing up to this point. This is a good time. Look, we were talking about 363 in the spiders. We hit that. We went up 30 handles in the spiders. I think we can get to 337 if things get really bad again. That would be another spot to start buying stuff for the long term. So again, it depends on your age and what you're looking for. Meanwhile, we're just trading our asses off. And it's a good environment for that. You just got to know what you're doing. It's a good environment for that. No, CPI didn't come out today, I don't think.
No, we already got May's CPI at the beginning of June, so we won't get June's until probably the first or second week of July.
Exactly. You know, and this selling just feeds on itself. Alex, you buying Microsoft at 258.60? Again, it's not stretched. The market's making new lows here. I don't know. I don't want to try to catch a falling knife here. I'm not in a hurry to buy anything, right? NVIDIA is making new lows. Every chart that we look at is going down with the market. I mean, even Boeing, right? Boeing was so strong this morning. And Boeing's down 7 points from where it was this morning.
Yeah, Tesla.
This could be the beginning of a longer term down, just my opinion, but nothing is really bullish. Yeah, I mean, I agree. It could. You know, when we got down a little bit and we rallied up to 4 and change, I said we didn't see the lows. Then we went back and we tested our 363 level. I still wasn't convinced we saw the lows, but it was a good place. It was a good place to be aggressive for a trade. Yeah, I mean, depending on what happens in the next couple of weeks, month, whatever, the market could certainly go lower from here. Of course it can.
Well, yeah, and that's why I was talking about the kind of cyclical nature just of the market, right? I think that's probably more likely than not that right now over the next few weeks we keep moving down. We're going to get all the biggest companies, Apple, Microsoft, Tesla, Amazon, report earnings sometime in the next 30 days or so. And I think when those reports come out and they're not great and those names move down a little bit further, that'll obviously bring the overall market lower. But what does that do? It gets us closer to that bottom where sentiment is bottomed out. It'll feel like we're at rock bottom. It'll feel like everything is just moving down. There's no end in sight. And then the tone starts to shift. Maybe the Fed comes out and says, okay, now inflation has come down because people aren't spending as much money. Now we don't have to raise rates as fast, or we can slow down the quantitative tightening, you know? So these things go into cycles. It's not going to last forever, but right now we're in the bear market. That's the trend right now.
No question about it. That's exactly right. And you know when this will be over? Because I have people asking me that all the time. When is this? It'll be over when it's over. And nobody's going to pick the bottom, wherever that ends up being, right? If you're thinking long term, and some of the stocks that we're looking at, the ones you just mentioned, Aaron, if they have earnings and they get pounded again for whatever reason, that's when you have your list together, right? Is Apple going anywhere? Is Google going anywhere? Is Microsoft going anywhere? They're not. Okay?
Yeah, and you got to have perspective, because these stocks most likely, or maybe not most likely, but will probably get hammered because Apple made, $120 billion in 3 months instead of 140. Apple's still gonna be making a bunch of money. So it's to you got to have some perspective and be able to look at, okay, this is the move that this stock is going to make in the short term, but what is this company and stock going to do in the long term? And if you think long term Apple's going to be fine and continue making lots of money, then look at that short term move as a long term buying opportunity.
And even with that, I use my technical analysis to do that. Okay, if we go to a weekly or whatever it was, I think a monthly in Apple, right? Look what happened in a monthly chart in Apple the first time it went down to that 129 and change. Okay, this is a monthly chart on a 30-minute. It went from 129, it went back up to $143 recently, right? It did that recently. So that was a great spot to get in. So what I'm looking for earnings now, okay, God forbid, and who knows, 111.20, that's our weekly 200 EMA. And then if we go to the monthly, 97. And please let their numbers be bad and sell off to 111 and 97. So I could buy that stock and put it away for 10 years. Okay?
I'll buy it down. I'll buy Apple at 110 all day long.
That's what I'm saying, right? But it could happen. I mean, it could happen. But Apple is not, Snow, and it's not whatever some of those other companies that have gone from 900 to 100. Okay?
Shopify, Twilio.
Yeah, exactly. It's not any of those stocks. Apple's going to make money. They're always going to make money, and they're not going anywhere. So please give me Apple at 111 and 97 so I can put it away for 5 years. I mean,
yeah, and just because you mentioned some of those other names, your Snows, your Twilios, people are looking at the market right now, or they're looking at the economy, they're looking at layoffs in some of these companies and thinking, okay, we're starting to see it. This is going to be, the big recession, the 07, 08. That is not indicative of the overall economy, and the market isn't really either. You have to look at how FedEx is doing, how Walmart, and when those companies, if they start laying people off, sure, we can have that conversation. But right now, from everything I've seen, I'm not too worried about the overall economy coming to a halt and crashing in that fashion, in that 07, 08 fashion.
I'm not either. Okay. We're just in a different era than things are just different and they evolve, right? Look at COVID. COVID was the end of the world. All right. That was it. We're never going outside again. The spiders went down to $218, right? And then we went up 150% from there, or whatever it was. I've been saying from the beginning with this, it's going to take a little longer because there's a lot of other things going on. It's going to take longer. We're not bouncing here and going to make new highs by the end of this year. But Peter brought up a very interesting statistic to me the other day. And he said the last 10 times or throughout history, when the first 6 months of the market have been down between 15 and 20%, the average return from there has been 24% for the back half of the year.
The average return has been what? Sorry, one more time.
24% for the back half of the year.
Wow.
Yeah, and again, that doesn't mean it's going to work this time, but that's been the average, right? So if we're down 20, 25, 30%, usually it brings us up to break even within 6 months after that. Did I ever see May 6, 2010? I was certainly here.
that was the big flash crash when Apple.
Yeah, well, that was just dropped. Yeah, that had nothing to do with markets or anything else. That was just a glitch in the system and another tremendous buying opportunity, period.
Yeah, I think some people were able to get filled 20% lower on Apple, and all these things.
Yeah, and again, thinking about it, the Fed's, it's not that the Fed's against us. They're between a rock and a hard place right now. Eventually, that'll get fixed too.
Yeah, they really are. And that's what I think will be one of the big catalysts when we do bottom is that I mean, and this is just a prediction. I could be way off, but I think we're going to see, based on some of the commodity prices I've seen, inflation should come down. And then when that happens, the Fed won't be in the same rock and a hard place position it's in right now, like we're talking about.
Exactly. Hold on one sec, guys. All right. So, guys, SPYs, how low we just go? We got the 383.60 and we were 383.20. That is a gigantor level. We're going to cancel for now, guys. Look, if we break this 383.20, guys and girls, we can have some problems again. It's really 383, but that's such a big level. I mean, one day we're going to go down 10 handles in the spiders in 2 hours. That's crazy. It really is. Yeah, let's just wait, guys. I mean, this market, let's see if we can get a fall from moving average in the spiders. We're getting set up. Let's do this, guys. Let's put a little marker at 383. We almost got a 20 RSI in this, so let's see if this, I don't know if we'll be here long enough for this to play out with everybody, but let's see if we get the 383.
383, we're at about 383.40 right now, so you're hoping it drops another 40
hoping it drops another 40 cents. We're not going to buy it. I want a marker out there because our relative strength is getting way oversold right now, which means that we should get a bounce from here. Hopefully it'll go down to 383 before we get the bounce in it. But when we see a relative strength in the spiders around 20, which we're getting close to now, you're going to see a bounce. And maybe we just got it. So, the way to play this trade is we go to our 1 minute. And as soon as we see this green bar, we buy the trade, buy the stock. And you can see we could have got 50 and it's already trading at 75.80. So that would have been a little trade. But again, I wanted it to get down to 343, 383. So we missed it. It's okay. If we break this 383 level in the spiders, we're going to have some little problems, I think. So let's see what happens in the next little bit. Tesla. Now, let's see what the next level we have in Tesla for a trade or anything else is. I'll go right to the daily. All right, so Tesla looks this looks exactly like the SPYs to me, right? So 708 is the support in Tesla. And check this out, guys. We just traded at 707.43, right? So I showed you a chart where we had a little support at 708, and we're getting a little bounce from here. I mean, it went up, almost $2 from there. So that could have been a little spot to buy around 708. But again, if these things don't hold now, I think we're going lower. So I'm not in a hurry. But it was a good trade.
Yeah, I think right here, if I was picking I'd wait, because if we break through that next level, okay, maybe
100%.
then I'll get that bounce. But right now, it doesn't look like anything's really trying to catch that bounce.
Nope, not yet. Not yet. We need things to be a little more oversold. And again, the level in the spiders was 383.20, and we missed it by 10 cents. Right? If we go to the daily again, yeah, it was exactly 380. Actually, it's 383 now. It keeps changing, but whatever. When the market is like this, guys, bad traders, okay, lose a lot of money. And why is that? Because they're trying to pick bottoms in these things. And every time they buy something, they don't think it can go any lower. And they either buy a little more and they keep watching it. Before you know it, they're in trouble and they've blown up their whole trading account. So you wait, you be patient, wait for setups, wait for things to get really oversold, and follow all the rules and stuff. I have one thing I want to push, if I can. Al.
Go ahead. Good, sir.
Yeah, UVXY. Again, we bought these UVXY options for 16 cents, and now they're 30 cents right now. So that's good. Good trade. Once we pay for the whole trade, we'll sell one of those. We'll see what happens. Okay, we're doing a webinar tomorrow night. It is free at 7 p.m. All you got to do is go to Wall Street Global Trading Academy, WSGTA.com. Tomorrow night, 7 p.m. I'm going to show you a lot of my technical analysis, how we found the short-term bottom that we recently traded off of. I have a bunch of surprises for you guys. Thank you. That's great. Wall Street Global Trading Academy.com.
Yep. WSGTA.com will take you to that website. Go check out that webinar, because David, I mean, he's been doing this. He knows what he's talking about. If you want to learn how to trade well, like David said, bad traders are losing a lot of money right now. Good traders, maybe the good traders aren't even making that much money, but what they're not doing is losing a lot of money. So, go check out David's webinar if you want to learn how.
Yeah, guys, just for coming in tomorrow night, you're going to get a week free in the room. And our course is for sale. We've significantly lowered the cost of the price of our course, because we want a lot more people to get involved. Anyway, come check it out tomorrow night, 7 o'clock. We have time for a couple questions, or you got to run now?
We got time for questions. I don't want to take too much of your time, but if we want to answer some questions, let's do it.
Let's talk about Nike for a minute, because this is another one that completely got some people crushed this morning when the earnings came out, right? Earnings came out, I think, yesterday, whatever it was. But here's a stock that went to 114 this morning, and we're trading at 104. Completely turned around, right? Yeah, the earnings could have been great. This is another thing, guys. Earnings could have been great. Okay, it doesn't matter. The only thing that matters is price action. That's it. So yeah, you see the SPY bounce that we just got, everybody, right? So my level was 383.20, and we got to 383.30. We missed it by 10 cents, and it gave it $1 bounce off that level. And look, you gotta
be willing to cheat sometimes, David.
Yeah, I know, but look, if I had $1 for every time we missed trades by a penny, I'd have a lot of dollars. But it happens. Okay, it happens. But again, check out how low the relative strength was in the SPYs. And when we see that, 90% of the time you get a bounce. So the way to see if something is way oversold is look at your relative strength, and if it gets around the 20 level in any stock, that's telling you that it's oversold. Okay. So, and it was due for a bounce, and it just bounced $1, and it missed us by 10 cents. What are you going to do? Do I have a Discord channel? Rakesh, I am starting one when I get back from vacation. I'm on vacation next week. Yeah, I've had 1 million people tell me they want to do a Discord, so I'm doing it.
Hell yeah.
5-minute chart, MD. So I'm doing a Discord. Anyone who comes tomorrow night can come hang out in the room for a week. That's it. My best trades have been no trades. Just buying on run days got me green for the month. There you go, Sammy. If you're trading, that's fine. But when you're buying on red days, you got to sell on the green days, right?
Exactly. All right, David. Well, always a pleasure to get you on. Everyone, go check out his webinar tomorrow night. David, have a great rest of your Tuesday. Great rest of your week.
You guys take care. See you soon.
See you soon. All righty, y'all. Giving y'all a quick rundown here. In a few minutes, we will have Options Mike join us. We'll be talking about some options, if you could have guessed that. We'll also just see what charts, what stocks Mr. Mike has been looking at. One thing I wanted to touch on before we get to Mike is, so I've been looking at airlines, kind of deciding when and how I want to get into some potential airline trades. Here's a tweet from Javier Blas on Twitter. I hope I'm saying that name right. He's a good follow. He posts, I think he's with Bloomberg. He posts a chart of the day though, and this was Sunday's, I guess, June 26th. Chart of the day. The number of passengers traveling via airplane in the U.S. hit a post-COVID high of 2.45 million people on Friday. The 7-day moving average is now trending above 2.3 mil, or about 15% below the pre-COVID level. So essentially just the amount of people traveling is the highest it's been in the past 2 years since COVID. Still not at where we were before COVID, but getting very, very close. Now, what does that mean for someone who's looking at the stocks for an investment? Well, all right, here are the things that I know. I know flights right now here in June 2022 are a lot more expensive than they were before COVID. Have some operating costs gone up? Yes. Are the airlines able to effectively pass on these additional production costs for the companies to the customers? I am not really so sure. We'll see when these companies report earnings, which will be sometime in the next couple of weeks. You know what their revenue growth looks like quarter over quarter. If it's growing, then the answer is yes. They are able to pass off any additional costs to their customers. But the question, why are plane tickets, why are airfares so much higher than they were 2 years ago? And I'll open this one up to the chat. Throw your answer to that question in the chat. Why are plane tickets so much more than they were 2 years ago? And there are a lot of factors. So there is not just one right answer, but I have one answer that I think is bigger than all the other answers. So again, let me know in the chat what you guys think. I'll give you guys a few seconds to throw that in there. Let me throw this full screen to make sure you guys can see this chart, see what I'm looking at here. All right, we got Aaron in the chat saying oil. That is a correct answer, not the one I'm looking for. All right. I do have I'll pretty much a right answer, but it's not in the main chat. So we'll keep this going for a few more seconds to see if we can get any more participation from the chat than just Aaron helping out. All right. Let's see. We've got wages, pilot shortage, Powell. All right, pilot shortage, wages, the consumer fits the bill always. So what our next guest options, Mike in the private chat said, he just said because they can get away with it, saying the airline companies. That's pretty much what I was looking forward to. Well, the real answer I was looking for was because people are still buying the tickets at this price. If people weren't buying the plane tickets at these prices, they wouldn't be charging the prices. They're charging the prices because they can get away with it, because people are still buying the tickets. There's still extraordinarily high demand. So to me, to think, okay, the airlines aren't doing well right now. I mean, you can look at this chart. Travel growth has grown pretty tremendously. I think this big drop off here in the beginning of 2022 was Omicron related, in renewed COVID fears, but that trend reversed quickly and is still on this uptrend. They're able to charge more for these flights. There's basically a cartel of airline companies. So if Delta, United, American Airlines and Southwest all decide to charge 20% higher prices, you got to pay them because you don't have other options. There's only so many airline companies that can get you from this airport to that airport. Um, so, people are still buying these tickets, which is not really conducive to the whole argument that we're about to face the biggest recession, ever. I traveled over the weekend. I was at a little beach town in North Carolina, and you couldn't get a parking spot. Every restaurant was packed. I mean, it was like crazy looking around. And I know, I get it. It's not that important, seeing those things with your eyes, having that anecdotal evidence. It's more important what the data is showing, how much money people are spending. But still, I mean, I look around and it's like, sure, the University of Michigan consumer sentiment might say this, but people are still spending money. People are still out there traveling. So, bottom line is people are willing to buy the airline tickets where they're at right now so that the airlines can get away with it. They can get away with charging these high prices. Um, and that is one of the areas that I expect going forward in CPI reports to continue to see elevated inflation in airlines, in gas, and then a lot of consumer goods I expect to fall. So we'll see if those goods that are falling are fall enough to make up for the increase in other areas. But yeah, airlines I expect to remain high. I don't see a reason why the airlines would start charging less. They don't have to. All right. Let's go ahead and bring our next guest on. Options Mike, one of my favorite guys to go to for options. Want to see what he's been trading, what stocks he's been looking at. As always, if you have any questions about different options trades or option strategies, go ahead and throw them in the chat while we have Mike on the show. Let's go ahead and give Mike our special intro and say hi. Mr. Mike, how you doing today?
AB, how are you, bud?
Pretty good. Been too long since we've had you on the show.
It's been a while, but nice to be back.
Yeah. How are things with you? Have you been an active trading? What have you been up to?
Very little trading this week. A couple trades on both days. Not doing much here in this market until we get a clearer direction of where we want to go here.
Yeah. No,
this
definitely.
is very, anybody that thinks this is easy to trade action like this, there's nothing easy about it today or yesterday.
Yeah, and I mean, if we don't get a bounce at some point here, I mean, to me, it looks like we could easily continue moving lower, and then I would have no conviction saying, oh, tomorrow we'll get the bounce. If anything, if we stay so weak all day, that would make me more inclined to believe tomorrow is not going to be that great either.
Except we have GDP tomorrow morning before the market opens. We got Powell speaking again before the market opens tomorrow morning. Then you have PCE data on Thursday and ISM manufacturing and services on Friday. So, we're facing a deluge of inflationary data. We had consumer confidence today going into the long holiday weekend. I think that's what's going on here at the markets. They're waiting to see how this data comes in, and we're kind of in a holding pattern. And when you look at today's action, and I know we're just on the lows here. We're coming right up on the 8-day on the SPY at 383. But the truth is, there's no volume. There's no big selling pressure. There really is just a complete lack of buyers here, and that those buyers just completely disappeared just as consumer sentiment came in around 10 o'clock.
Yeah, and I mean, looks like I'm looking right now. Looks like maybe on the Qs we're getting a tiny little bounce on the 1 minute chart. Do you want me to go ahead and pull your charts up? What are you looking at?
Sure, I got a chart up here of the SPY for you guys, and one thing you always have to do is take a look at how things have traded out. And if you go back to 2 Fridays ago, remember we're going into the holiday weekend. We had Juneteenth, and then the 3-day weekend, and you got this big doji candle on a new multi-year low here. Well, they used that day to trap all the shorts, right? You gapped up. We've held that gap. Then we went sideways last week on a short week for 3 days. And then on Friday, we gapped up and pushed again, and we trapped everybody. So what you can really see here right now is this market's trading a couple gaps below it. And then you have another big gap sitting up here at the 396-ish area, just shy of it, 395, 95 to be precise. And the market hasn't decided which way it wants to go. And, I don't know where we're going to go. I mean, I expect GDP to be weak. I don't expect good numbers coming in, but the market has seemed to want to rally on the hope. And again, it's the hope that the Fed is going to pump the brakes on their interest rate hikes which I don't think they're going to. So I think this market's just trying to look for any kind of hope to get the Fed to pause or to pull back a little bit.
Yeah, no, I agree, and I mean, I think if I had to guess, I think the expectations across the board is for the GDP number to not be that great, but then that leads the potential for okay, even just an okay GDP now that beats expectations.
Correct. One of the weirdest trades of the week came in yesterday, and I haven't taken it, but I've been watching it. The TQQQ, and if you don't know what that is, and I wouldn't recommend taking options on it. The TQQQ is a 3 times leveraged long on the Qs, right? So it's leverage. So you don't want to take leverage upon leverage. It's a day trading instrument. But we saw over 100,000 of the July 8th 35 calls come in yesterday, and they all stuck, right? They're still sitting out there in open interest today. And that's somebody who's taking a bet on that the market's going to pump between now and that date. And they bought them at 24 cents. I think they're trading right now around 10 cents. I haven't looked on them in over an hour, I have to be honest with you. But that's an interesting thing just to keep your eyes on, because somebody's betting big that this market's going to rally between now and next week. And I would say the same thing to everybody else. We have data tomorrow, Wednesday, Thursday, and Friday. But Friday also goes into another holiday weekend, and nobody likes to be short going into holiday weekends. That's kind of the MO of a market like this. In case news comes out, something that changes it, nobody wants to be short, and that might be what they're playing for.
No, 100%. I'm just catching up on the chat here. Thinking about saying if you saw there were no buyers, wouldn't that be a signal to short?
No, because there's an old saying, never short a dull market, and we really have a dull market here today. Volume on the S&P 500 is at 37 million shares. We're coming up on 3 hours in, and we are below, we're maybe at normal volume levels. There's no real selling pressure. It's just a day where there's no buyers in here, and for me, I'm looking to short when you have market moving down, not when the market's just kind of sitting here going sideways, bouncing around. We really haven't gone all that far today. And I think what most people tend to think is that, well, we've had this huge down move. Yeah, but it's been very slow, methodical. In fact, not the easiest thing to trade, because it's just very slow drip down today. And here comes your first bounce, and we'll see. If you look at a 5-minute chart, can we get above the 8 EMA on the 5? On the SPY and on the Qs, that would be a big step here.
Let's see. Thinking about it, saying if Powell is fighting inflation, would he really slow raising if he's serious about fighting it? Well, people are anticipating that if inflation does come down, if there is essentially a recession caused where that causes demand, then that would just make the Fed more likely to then cut those rates at some time in the more near future than further down the road.
I mean, I think the market at this point is pricing in a 0.75 basis hike again at the end of July. Remember, the next Fed meeting is the end of July. Between now and then, by the way, earnings season kicks off. So, we're going to start getting a look at some of the next quarter earnings, which are also going to tell the tale of this tape and where we're going to go. The Fed is going to be stubborn. They're going to stick to their plan until they're ready. And, the high probability is the Fed's going to overshoot on interest rates, because this is what they always do, right? They were too slow to come in and start changing what they were doing, and now they're going to probably overshoot in the other direction. Is what it is. This is the market we have, and we just trade around it. We have no control over it.
So what will be your sign, Mike, that you said you haven't really been doing a lot of trading? What will be your sign to kind of get back in, get more active?
I want to see action where we have, if you look at the MO of this market the last couple of days, you've had a big burst of activity in the opening 35 to 40 minutes, and then we just do nothing for most of the day, and then you get a burst again in the final 10 minutes. You're looking to try to find a trend day or something on data where we have more volume, and maybe we need to see volume, something moving up, a good volume coming into a name that would catch my attention. And, right now we're really just not seeing it. The market's kind of gone into summer mode here, even though we're not even quite into July yet. And, we'll see where we go. I'm not, today's and yesterday's actions doesn't really overly concern me. And I think that's what I tell a lot of people is, sometimes you look at this action and say, oh my God, this is the worst thing in the world, but there's nothing really going on here. We're really waiting on data. And as we're waiting on data, the market tends to want to just chop around, go sideways, stop people out. Again, you're not seeing any type of vicious selling coming into this market.
Yeah, and I agree. And I think, like you said, we're just kind of in this zone where you're sitting back waiting for data. And I think, unfortunately, a lot of that data that we end up getting is, kind of our lagging indicators looking in the rear view. Whereas for the most part, investors, buyers, and sellers, they're looking at what companies are going to be doing in the future. So I do think this will continue to be just volatile, but interesting times for both people that are trading more as day traders, quick in and out, and then also people that are long term investors.
I think, I don't think, for what it's worth, I don't think this sell off that we've been experiencing is over yet. I could be very wrong, but I don't think the low was put in a couple weeks ago at 362.17 on the SPY. That said, I still think we could bounce up into the area of the 50-day on the SPY, and that would bring us up to fill this gap up here to the 40. Let's call it the 401, 402 area, and then that would be, to me, the big spot to watch. Once you got up into this area on the S&P 500, that would be the big area to watch to see how we handled it. It would be the first touch of the 50-day since all the way back here in April, and that would be a big spot if you wanted to try to short. But we're data dependent, and you have a lot of data this week. So right now, I'm just taking it easy, letting this market tell me what it wants to do. And it's not exciting. And, not everything's always exciting with what we do. And everybody has to remember that. Some days, sometimes you just have to sit back and chill. And, I tell people, my members and stuff, sometimes the best trade is the trade you don't take. If you're not sure, don't trade. If you're not comfortable shorting or you're not sure about shorting, don't short. But don't also be trying to take longs in a market like this today once we started selling off, because there was just nothing to be had. Maybe here now we're going to get a little bit of a bounce, because ultimately I don't think they're interested in breaking this market today. They want to run stops, right? So, think about how this market works. It's filled with algos, guys, and they spent all day on Friday, right? If you think about last Friday, it was a tough day to trade. Big action on the open, big action on the close, and in between we went sideways for about 6 hours. All they're doing now is running these stops. They're trying to stop everybody out who ran into here ahead of tomorrow's data.
Yeah, and then Friday was also the Russell rebalancing
Right.
day, which is one of the highest volume, if not the highest volume trading day of the year usually. But you were mentioning earlier just kind of the lower volume, and once we see that volume increase, is a sign that you might start getting more active. Do you, and I know it's summer, and you mentioned that too, and that things kind of tend to slow down in the summer, but how much of the lack of volume do you think is attributable to that, to the fact that it's summer versus just that these markets haven't been strong?
I think it's attributed to the fact that a lot of retail and traders who joined us during the pandemic have been blown out of this market, right? They didn't understand how to trade this market when it changed because they were brand new. And I don't think the big funds are yet buying into this market, so they're missing. So you have a lot of algos that are trading, and they're out to design. Their job is to get out there and try to take money from everybody else. And I think most people are just watching, waiting to get an idea of when this is over. And again, can you look at the macro of what's going on in this world right now? You still have China with all sorts of COVID problems. You have the Russian Ukrainian war, which is showing no signs of stopping anytime soon, which is creating fuel problems, is creating food problems and inflationary problems. China is still threatening Taiwan. So, and inflation's out of control. So the macro environment, you need to see a change at some point. And, the market will probably start to front run it. You just have to watch for signs. And for me, we've yet in this market to see a flush. And what I mean by that is, we had this big sell off, but we haven't had any big panic moves. If you look back here to the start of the war, that was a 250 million share day. And that was a huge reversal candle. We haven't had anything like that through here. Very low volume. You need to get that. Typically, markets bottom on a panic move. Typically, not always, but typically you get some type of flush in the market that's going to be very high in volume, that's going to reverse and give a signal that the funds have said, hey, I want to own stuff here. And that's what you have to watch for.
100%. Mike, do you mind pulling up Tesla's chart for a second? I do want to talk some Tesla, because we've had some people ask some different ways to strategize on Tesla options. On a lot of these more expensive stocks, and for me, Tesla is still, it's not as bad as something like Google or Amazon pre-split, where it was a $2,000 stock. But I like to implement spreads on some of these more expensive stocks.
So spreads can be great, especially on expensive stock. They're going to reduce your risk and allow you to sit in the trade longer. They also do make it harder to get out. And that's the one thing I think everybody forgets about spreads, is because you have two moving parts. And on a name like Tesla, the bid ask on those two different option strikes can be quite wide. It can be very, very difficult to get out other than at a market order sometimes. You'll put your limit order into fill, and you may have to really wait there. The way I usually get out of spreads is I'll put a price up and let it go run up and hit it, and it'll take me out automatically instead of waiting for it. The other way to trade a name like Tesla is to use way out of the money calls and option and puts. And because just again, the amount of this name can move on a daily basis, it has a very, very wide range. It's not unusual for this name to move 40 plus bucks on a day. I think the average move right now is still $47 a day on average. So that means on a weekly option or any given day, you can play $100 out of the money on an option and still make good money on it on a move. So, a lot of people think they need to go close to the money. On a name like Tesla, you can be easily 100 bucks out of the money. If you're going longer term, you can be 150, 200 if you're really looking for a big move.
Yeah, no, 100%. I've done that before with Tesla where I'll buy option, almost lottery tickets that where the price it would have to be a 10% move on Tesla to reach that strike price. But then if it moves 3% quickly, that contract is now up like 100%. And I sell it even though it's probably never going to touch that strike price.
Right. And that's it. You don't need to cross your strike. You don't need to get to your strike. The other thing I'd always tell people is you don't have to sit in all of it to the end. Scale out, start taking some profits and use a stop, guys. In a market like this, use a stop. I used a stop today on Amazon and I was long it this morning and it saved me. It saved me I made a little bit of money on it instead of taking what would have been a huge loss as it came crashing back down. And you have to use stops in a market like this. Take scale out, take money as you're going along, but just get your money, get in, get out until this market changes, and eventually it'll change. And everybody keeps saying this market's over now. I went from a couple years ago hearing it's a whole new market. You don't understand this new paradigm. Now I'm hearing that this market's dead. It's never going to be tradable again. I've been around for a while. It'll change. You just have to be patient, and the market can stay like this longer than you can stay solvent. So just remember that.
Yeah, and the situation. I mean, we were talking about this earlier. This industry, the market, the economy is cyclical. We're in a cycle right now, and what that means is it's not permanent. So, the bear market, these negative trends, just as quickly as it seems that it's, we've been in this downtrend, will reverse that quickly. Does that mean the stock market will go up that quickly? No, but you'll see that sentiment kind of shift and turn over in real time, right? Well,
Yeah.
instead of talking about inflate, whatever, and how bad all these companies' earnings are, the conversation will be different. We'll be talking about different things.
Yeah, and try not to listen to too many of these analysts. So the last couple of days, I've been watching J.P. Morgan analysts coming out and said they're not worried about a recession. But then you watch what J.P. Morgan as a company did yesterday, and they did not increase their buyback or dividend, even though they could have. And that's telling to me that the analyst is saying one thing, but Jamie Dimon and the others up there are saying, no, we're worried about capitalization. That's why they didn't do that. And a lot of only one bank did a buyback, and that was Morgan Stanley. All the rest didn't do anything or did dividend hikes. So, these guys are going to talk out of one end and do something else. And the bottom line is the big institutions, we don't see them buying the market here yet. Don't see them coming in. They're not looking to get actively engaged yet. So you have to wait for that. And, Tesla also is going to split again. Remember, this is not the same company the last time we had a split. We're not in the same environment. So don't expect Tesla just to ramp hard into that split as it comes up.
Right. Yeah. I mean, I think the executives that all have stock options and whatnot are hoping it does, and by doing that, but I don't know if it will have the same effect now this time around.
Well, look at Shop. They split tomorrow. They have not run into it. That split, Shop goes. If you're not paying attention, Shop's 10-for-1 split is overnight. It's going to be trading somewhere between 36 and 37 when you wake up tomorrow morning. So.
And Google too is getting ready for a split. And I love Google long term here, and it's here is
Google's
relative.
July 15th, I think.
Yeah, I'm not saying I'm going out and backing the truck up into Google right now, but especially if Google continues going down another 10% or so, which I think is kind of about the number that I have on for. I mean, yeah, so at SPY we're at 385 right now. If we go down 10%, that's another $38. That'll bring us down to right below 350. I would not mind adding Google down there if it drops another 10%.
Yeah. And somebody else brought up Easy Mike, and you're right. I talk about this all the time. every night, right? Every day right now, we keep seeing these reverse repos in the market, which are new all-time highs. There's, $2.3 trillion in reverse repos. And what that means is funds, instead of taking money and putting it into the market, they're giving it to the Fed to get a little bit of yield back for a short-term hold. And that means that they're not putting that money into the market. So, you need to see that change. That's something else to keep an eye on. When the funds stop funding those reverse repos and you see those numbers coming down, that would be a sign that they'd rather take that money and put it to work in the market instead of taking that small little yield that the Fed gives them for loaning that overnight.
Interesting. Yeah, I never understood the importance, I guess, of looking at those reverse repo numbers, but that makes sense.
Yep.
Let's see. Any other names you're watching? What have you been looking at Bitcoin or any of the crypto charts recently?
I have. I'm not a Bitcoin guy. I got to be honest with you. I'm not a crypto guy, but I mean, they've been beaten to a pulp here. Bitcoin, the futures are trading down right now at 20,670. This is the ETF, the BITO, and this thing has been pulverized. And I don't think that we are going to know what's going on here until a couple more of these funds that are crypto exchanges blow up, and then we see what the aftermath of that is. You had 3 Arrows is blowing up, and then you've other ones are in trouble. You have Coin that's not doing too well. So I think that fallout is still in process of going on. So I'm kind of just avoiding that sector.
Yeah, I don't think we've seen the full, the capitulation point, if you will, in crypto. I think a lot of these funds that have more exposed, that have more leverage and whatnot, we'll see that fallout continue. Kyler Gilbert in the chat's asking, can you explain the reverse repo a little bit more?
I mean, I can, and I can give it a little bit to you, but I would go Google it, right, to get the best information on it. But basically, what's going on is the Fed needs money to fund all their things they're doing, all the bonds and stuff. So what they do is they borrow money from funds, so from like BlackRock and Goldman Sachs, and something like 90 of them come in on a daily basis, and they give out a very small interest on that. They'll hold that money for 24 hours and they give it back, and the money is extremely secure. And this is why funds are willing to do it, right? Because you're giving the money to the Fed. There's no way that's not going to, that money's not secure. So it's just their way of paying the interest and stuff that they have to on all the bonds, and they're using the money and they're paying some more on that. It's not a big deal, but what it really says is that funds would rather take that small little yield there than deploy big money into the market. And that's the thing that has me, until we see that change, that's my concern.
Interesting. That makes sense. Gavin in the chat is asking if we can check out Square. SQ.
Love Square long term. You got to wait for this thing to find a bottom. I keep looking at this. It's on my buy list, Gavin, to be honest with you. It's one of the ones I want to own long term. You had a nice bounce here off the lows from 55, but you notice we failed here right at the 21-day, and this is where we've been failing since we broke it back here in April. Early April, right? That black line, you can see every time we come into it, we fail. So for me, I'd rather wait, let the market come in, probably buy some, maybe try to even get it down to 40s if it goes that low. Or if it takes out the 21-day, that might be a place to try some as well. But right now, you cannot buy it into the 21-day, or that should be where you're selling into until it breaks it.
Yeah, I like Square long term too. It's just so tough. I mean, all these names have been just absolutely beaten down so bad that it's like you said, you don't want to be the one catching that falling knife. I mean, it's actually Block now. Block is down more than 70% over the last year.
Yep, but was it ever really worth the numbers they were at? And if you look at the P&E, I don't have to go look, but the P&E on this thing the other day, I looked at it and it was still high. And that's a problem in this market because the market's looking for better valuations. And what is the PE sitting at in Square right now? Let's see, we'll click on there. It'll go to Zacks. Zacks is usually pretty good with this. Of course, it's taking forever to come up. There we go. It's still at 47. I mean, and that's part of the problem. The market doesn't necessarily want to own something with a 47 PE here. It'd rather have it down somewhere closer to 20.
Yeah, I mean, let's see. Gavin's saying Hood is running.
Yeah, I mean, there's rumors on Hood, right? So, what is it? somebody yesterday, there was a rumor that somebody has a stake wants to buy them, and then you got Charlie Gasparino today on Fox Business News saying it again. And bottom line is, I don't know. Right now, I know one thing is that their stock is worth less than their cash value at the moment, but this is a company that has big problems. They've never managed their money well. You have the SEC is looking to potentially change the way they do business by taking away pay for flow, pay for
Payment for order flow.
pay for order flow. Yeah. And then what do they do? And then how many people stay with them? So I don't know. I just don't know on them. I just think there's better companies to be in than Hood out there at this point.
Got it. All right, let's see. All right. Well, Mike, do you have any other names you want to look at before we get going?
Honestly, I think you just have to be so patient in a market like this and just know exactly what you want and want to get into. For me, I keep watching Apple closely because Apple is one of those names that is just always strong. And, you got a nasty candle today, but here it is on the 8-day holding. And that's the one thing I'd watch today. Do we hold the 8-day? We're holding it right here on Apple. The SPY is also coming right into it here right now. It's just into it and coming off of it. If you hold the 8 days on these indexes, it's saying that this is nothing but games going to data tomorrow. If you were to close under that with some volume into it, you got some gaps to fill. They may be saying they're worried about the data coming out, and then we'll see. But otherwise, yeah, I'm not really looking at much right now until the market gives a better reason. And if they do, I'm looking at names like Apple and Amazon and Microsoft. They have been stronger names in this market, and they've had my attention.
No, 100%. I agree. I think whenever I do get to that point where I'm saying, okay, finally I'm coming back in, I'm buying some of these names, I'm going to be looking more at the Apples and Microsofts of the world and not the, companies that aren't making as much money right now.
Yeah, agreed. And at least you want the stronger. They have better balance sheets. That's going to be important.
Yep. Look at the balance sheets. All right, Mike. Well, I appreciate you coming back on the show today. Always good to get you on. Like I said, it had been too long since we had you on.
Thanks, AB. Thanks, guys. Be good, be safe, and I'll catch you guys soon.
Stay green. All right, guys, that was Options Mike. I'm going to go ahead and drop his Twitter in the chat. You guys should go ahead and give him a follow. Great guy. To learn more options content from. Keep dropping those tickers in the chat. I see so many beats asking about ChargePoint, PLTR. We will take a look at some of these stocks in a minute. Let me go ahead. So one of the other things that I wanted to talk about today, because I've been seeing this more and more in media, in articles, and I just want to make sure we talk about it so that people can really understand why people are bringing this up right now and talking about it, and that is the bullwhip effect. So here, let me pull up this little Twitter thread I was reading on. So this is from Michael Burry. This supply glut at retail is the bullwhip effect. Google it. Worth understanding for your investing endeavors. Deflationary pulses from this leads to disinflation in CPI later this year, which leads to Fed reverses itself on rates and quantitative tightening cycles. And that's basically what I've been talking about. And I don't know. I mean, Michael Burry, he's a guy. I actually just recently read The Big Short, which was my first time reading the book. And it's an interesting time to read it with all this going on right now and people talking about the potential for an 07-08 recession. But honestly, reading The Big Short made me even less convicted on the chances of us having an 07-08 recession, because there were just so many different things going on in 07-08 in the Great Recession. You had something, the mortgage-backed securities and the credit default swaps that had to fundamentally break. And I don't know, at least I haven't identified something in the markets today, in the bond markets, in the housing markets, even in the crypto markets. I mean, I think even if crypto crash, if Bitcoin goes to zero and Coinbase goes out of business, I don't even think that has anything close to the effect of what happened in 07-08 has. But Michael Burry, I mean, he's been, I'd say over the last 5 years or so, a little bit less great at predicting things. At least, I think he's been doing well investing wise with his money. But he was short Tesla for a while. I mean, he's been calling for a big market crash for a while. But anyway, what he's talking about here is essentially the opposite of a market crash. He's essentially saying we're going to see these cycles play out, show that well, okay, corporate worker, that's neither here nor there. I don't think Michael Burry is sharing the CNN article because he's a big CNN guy, but the point in this article stands. A lot of big companies, including Target, Walmart, Gap, have reported in their latest earnings call that they have too much inventory from just because of the fact that the consumption mix has changed. Right. So this is more just data and things coming directly from these companies, not coming from CNN. This just happens to be who put the article together, and that's what Michael Burry shared. But yeah, I mean, when Target came out and reported their earnings and the stock crashed like 25% overnight, the story was that they had way too much inventory, that they weren't selling enough goods. But what the CEO was really saying was just that the consumption mix had changed. The same goods that people were buying throughout the COVID months are not the same right now. People are buying more, say, travel gear compared to electronics for the house or furniture for the house. Furnishes for the home are not selling at the same rate they did during COVID. So now, basically, all these companies are going to potentially pay you to keep a return if you buy a jacket or a TV. Say you buy a TV from Target. Well, probably not a TV. Say you buy a T-shirt from Target for $25 and you go to return it. Instead of giving you the $25 back and taking the shirt, they're going to say, "Okay, here's your 25 bucks back, but keep the shirt. We have too much inventory. It's costing us too much to house all this inventory. We don't need this." So what Michael Burry is saying is that all of this, and honestly, and this is anecdotal, I haven't seen anything about sales going on right now. I know Target came out and said that they were going to slash prices on some things they needed to by up to 90%, which is crazy. But I was walking around a CVS the other night and just walking down the aisle. Every single thing had the little yellow thing on it, like it was on sale. Now, was a deodorant still way more than it was a year ago? Sure, but it was on sale 20 cents off from what they had it listed a month ago. So what Michael Burry is basically saying is all of these things, or at least for what we're hearing from the company, would lead us to believe that this inflation would lower in CPI at some point later in the year, which will then result in Fed reversing itself on rates and quantitative tightening. I don't think anyone's expecting that to happen in the next few months or anytime soon. But if in 5 months the CPI number looks a lot differently than it does now, the Fed won't have any reason to continue raising rates at the rate that it currently is. So, it will be tough to think that if we do see that CPI come down, that we won't see the Fed just switch its position at least a little bit. And then we're having a completely different conversation. The market is behaving completely differently. And that's how the cycles play out. That's how the cyclical nature of these things plays out. Jay Rice said, "I'm not seeing any of the grocery store yet." Yeah, I agree. I think honestly, you'll see these prices come down. The deflationary, pressures come in on prices that have a more elastic demand. So things like clothing, things like new electronics that people don't necessarily need will be the first things that people start cutting out of their budget. And that's when companies will really come in and start slashing the prices of those goods. I don't think grocery stores, I don't think Kroger or Walmart right now is saying, "Okay, we need to drop the price of eggs by 20% because people are still going to buy those eggs anyway." So I do pray to God. I hope we see some of those prices come down in the grocery stores. But if I had to guess, it'll probably come later than some of these other goods. If anyone goes shopping tonight, goes to a CVS, goes to a Target, goes to a Walmart, let me know. Let me know in the chat tomorrow. There were a lot of sales going on, or there weren't. And again, I understand the sale price is still not going to be probably cheap. It's still, I still paid $2 more for a stick of deodorant than I would have a year ago. But it was at least nice that it was on sale from whatever price they had listed it at a couple weeks ago. So that's why, Michael Burry tweeted this. Then, of course, it gets picked up by Bloomberg, by Zero hedge. Michael Burry agrees. Bullwhip effect will force Powell to pivot on rate hikes and quantitative tightening. Um, so just something to keep in mind, and really from a more overview about what the bullwhip effect is. It's just essentially that, for in terms of inflation, inflation will come down so quickly, or that the goods will drop so quickly that it'll happen very quickly. The change in CPI, the change in inflation, it will be a quick bullwhip, not a slow, drawn out. So many beats. I was able to save like 25% with my Kroger Plus card yesterday. Yeah, I mean, that's the other thing too, is in times like this where things are more expensive, you really you gotta look around and figure out where can you be saving money. Like I switched on my credit card with Bank of America. It gives you the option to do different percentages for how much you get cash back on certain things. And I changed my one that I get the most on 3% back for gas, because I was looking at what's going on right now. What am I spending the most money on? It's gas. So I might as well get the most cash back on my credit card for what I'm spending the most money on. I think in the past it was for restaurants, because I was spending more at restaurants than I was on gas. Thinking about it in the chat, saying large bag of Garden of Eaten blue chips full of air, $8. Yeah, and even with food where there is a more inelastic demand, I think you'll see a lot of different types of foods try to come down faster than other foods. Foods that are less staples. More, most banks will start decreasing your credit limits. All right. Let's see what else we got in the chat. We've only got about 8 minutes of the show left today. So let's see if anyone's got any topics they want to. I think we pretty much talked about most everything wanted to talk about today. But if anyone's got any stocks or comments in the chat they would like to talk about before we leave, by all means, I'm all ears. Corporate worker. I drive across the Southwest a lot, and I notice there's fewer container trucks running back and forth since 2020. Yeah, and I mean, you can see that in just the price of shipping. The price of shipping has fallen off a cliff, which is just showing that less people are essentially paying for that right now. Oh, okay. I remember the last thing I wanted to talk about today was just a kind of overall crypto market in general, and what's going on with the crypto market, because you have a lot of these funds like Three Arrow Capital, Celsius kind of defaulting, figuring out which companies are going to be able to survive. And basically the biggest losers in crypto's recent downturn have been the ones that have had the most exposure to lenders. You have consumer facing apps like Celsius, you have various institutional trading desks, you have numerous players who are in the business of lending out crypto that have gotten torched. We've seen, like I mentioned, Three Arrows Capital been clobbered in just this recent market downtrend. And the crypto bull market from essentially the beginning of COVID to late 2021, you have to understand how much of that bull run, Bitcoin running from 10,000 to 60, was fueled by this leverage, was fueled by essentially this froth being pumped into that market of companies saying, okay, you want to buy Bitcoin, why not buy 10 times the amount of Bitcoin you would have using our lending platform? And people were doing that. There was a lot of crypto, a lot of Bitcoin, a lot of these coins being bought on leverage, essentially. So now you have a bunch of these lenders being crushed or wiped out. And it's hard to imagine that a lot of people will be in the mood to post their coins to an app in a lockup period to gather this thing, because you don't want your coin to be locked up in a period if it's going down 20% every single week. Easy Mike saying MicroStrategy will have a margin call AB. That will be interesting. I don't know. I from what I understand, the Bitcoin would have to get down a lot lower for MicroStrategy to actually get fully margin called. MicroStrategy was on our channel yesterday, or Michael Saylor, the CEO, founder of MicroStrategy. So great interview there with Mitch and Chris Kachi. I'll drop that link in the chat if you guys want to check that out. Bumrinden saying I'll probably never use crypto again and tell my friends to never use DeFi. Yeah, and I mean, I've seen that sentiment a lot. You know, whether it's on Twitter, whether it's my friends who bought some coin and got burned, they're just like, yeah, it's just not interesting to me anymore. So, I do think that crypto will have this kind of problem for a while of figuring out how to garner back the trust of the kind of general public. And I think specifically with NFTs, I remember talking about this on the show a few months ago. But what was really interesting is when NFTs were kind of new and hot, if you found the general public, someone who's not into investing, someone who's not into crypto, was hearing about NFTs, and maybe their initial reaction was, oh, this is interesting. Like, I want to learn more about this new digital art form or all these, and how all these people are making so much money on here. And that's shifted a lot, where now I feel like NFTs, especially on Twitter and Reddit and all these different social platforms, almost have a negative connotation associated with it. Like, people now, if you bring up NFTs, it doesn't garner the same amount of interest and just saying, oh, okay, what is this? Like, I want to check this out. Now it's, oh my God, these NFT projects are such shills, or oh my God, these NFT people are so annoying. So that's the kind of sentiment shift that I've seen, just from a again, anecdotal. But yeah, and I don't think Bumrinden, sorry if I'm not pronouncing that name right. I don't think you're alone in that sentiment. Let's do another quick check just on the overall markets before we wrap up the show today. Your Qs have come back a little bit, now down only 1.9%. Looks like we've gotten a little bounce. Pretty good movement there for the Qs. Check in on the SPY. S&P 500 is down a little bit more than 1%, so we're chilling out at that 3,800 level. Kyler saying NFTs died when Gwyneth Paltrow started shilling them. Yeah, and I think, a lot of people saw that going on in the NFT and crypto space. Just people, basically different celebrities shilling a project that did not have any value outside of the fact that the value is supposed to go up. So we'll see. I mean, I think NFTs, and I was just talking last night on our stream with Ruel about this, I do think NFTs have use case and have, potential going forward to be very useful. But right now, I think the primary use case for NFTs and for crypto in general has been speculation. So we need that to change first, before you get any big, any big comeback in the crypto markets. All right, so we talked about different strategies to trade Tesla options. We talked about an update on the airlines. We talked about what's going on in the crypto markets, and we talked about the bullwhip effect and why it matters. We hit all of my topics today. We've got about 2 minutes left, so final shot. If you've got any stocks or anything you'd like to check out, do it now or forever hold your peace. As always, please smash the like and subscribe to the channel if you have not already. Shout out Tesla PED in the chat. Thanks for joining us today. Please subscribe if you're a new viewer. And stay tuned, because we do have stock market movers with Money Mitch coming up. He'll be talking to Lance Roberts, the chief strategist for RIA Advisors. So if you want to learn a little bit more from the pros how to navigate these turbulent markets, stay tuned for Money Mitch coming up next. MD saying finally the NFT and meta world chatter has calmed down and reeled everyone back into reality. Yeah, I think so too. I think, that's been kind of overdue for a while. So, all right, guys, been a pleasure hanging out with you guys today. As always, we will be back 11:30 a.m. Eastern tomorrow for another episode of Benzinga Live. We will see you then. Till then, stay green. Love you guys.
This is Benzinga Live.